Hi, everyone. Alexander, Ren, how are you? Turnaround Thursday. Okay, Arena, hi. Hello, Sinatra. Shahab, how are you? Everyone doing okay? Hope you're having a decent week. S&P's on the verge of making new highs here. Hello, Marco. Haven't quite done it yet. NASDAQ's in a throwover. If you look at this formation that we have here. So for NASDAQ to turn negative, we need it to be back under 14,250. So it's 100 over there. So I was talking 14.3 to 5, and we're still going. Let's see if the S&Ps can make it up to 4,300 into next week, into month's end. Dollar put in a stand at an important level yesterday, right around this 91.42. Sure looks like a flag to me. Okay, pound's really getting hammered. I don't know what the news was in cable, but couldn't get back to 140 was something I talked about as a potential sell. So cable looks like it's headed to new lows. The dollar looks like it could be headed to new highs. We got to the 122.5 level in USD CAD yesterday, right around here. That's trying to turn also. And if you notice the momentum in Canada on the rally at the highs, it was confirmed. So that's telling me that this is just a high, not the high. Getting a nice pop in gold, trying to put in some basing formation here. And same with silver. Very similar look. And got what a surprise. 68.5 is still where we're trading the gold silver ratio. And the yen is coming off. Did make a new high up around 111. We came off very sharply yesterday, and we've recovered to new highs. Let's see if we're diverging. No, it's not done yet. And 10-year yield is pretty flat. I don't know, maybe this is going to be ABC. Maybe we're going to challenge this. So a lot of maybes out there for me today. I shorted euro yesterday, scalped it, and I'm still long some US dollar CAD. We'll see what happens here. If the dollar could continue to run, it held where it had to. I would say we start closing back under 91.40. There's something going on, but to me, we got from point A to point B in the dollar in a heartbeat, and this action seems to be corrective to me. So I still think there's another high coming in Dixie. And here we are Thursday, so we'll see how we finish the week. Any questions for me before I bring Blake in? We have Ben Maldonado here today. Ben's going to go over his market geometry. Yeah, crude sure looks heavy to me. I know people are talking higher numbers, but we have a two drive formation here, and we diverged up here. So I was, maybe there's one more run, but looking kind of heavy to me. So yeah, being long USD CAD is in a way a proxy. And if I want to say something about USD CAD, is that normally when crude is making a new high, Canada, even when it was in Canada, was making new lows before the bottom, and now crude made new highs, and Canada was still 200 pips plus, 200 pips plus in above the low, with crude making new highs. That's something that hasn't happened in a while. Okay, Scott, you want to look at copper? Here's the copper contract I have here. Still see a two drive there. and the yuan had a little bounce. I know the Chinese, thank you, Scott, for sending me that tweet. Part of the reason for strength in equities is there was a huge injection by the Chinese that they haven't done in a while. In fact, here I'll show you. And things usually do move when the Chinese are doing something. So let me just find that so I could show it to you. Here it is. So there you go. So China, and yesterday our guests talked about problems there, but China really came in. It's the most liquidity they've injected in throughout this chart going back to last year. So they're trying to keep things, keep all the balls in the air. Every time they, it looks like they, are ready to taper and they're letting a lot of loans go bad. They come in with something like this. So just wanted to show you guys that. Good morning, Blake. How are you? The Chinese are doing a Jerome Powell today or yesterday.
Good morning.
You see that blue line there? And the one?
Yes. Yeah. It's
That's
like, I'm sorry. I was just getting all my charts up and ready. Yeah.
Anyway, pumping. They're pumping, buddy.
Of course, man. And that's going to help keeping the party going, right?
Yeah. Maybe someone will rent or buy a condo in a ghost city. There's more liquidity, right? Go ahead.
But what you did point out is that crude oil is actually coming under pressure now, and we're at lows, and we showed a really big reversal from yesterday's 161% extension at 74.
Yeah, that was a great call, bro.
Well, I think we were both looking at it, and I think you said, hey, it was going to hit a new high and reverse, and look, it reached those levels, and so now the question is, what do you do if crude heads back down to, like, let's just say, $70 or $65 a barrel? As you pointed out, the dollar Canadian, or maybe, I blogged about the US dollar Norway.
Oh, yeah.
Will be a potential trade. And I think those are the ones that are setting up. No, the dollar Mex, man, it continues to go lower. It actually stopped me out overnight. I was long. I took a loss on this because, stocks are at all-time highs. I mean, look at the S&P. We're at all-time highs. So it's like, you know, we broke through this support. I didn't think we would crack this blue line.
Yeah.
So when we broke through here, I got stopped out. But, that's all right. You don't win them all. But what I'm also really trying to play it alongside is the US dollar and Norwegian krona. And this is the one that, if you have, crude oil finally starting to break lower, this US dollar and Norwegian krona will be a player to the upside, I think. And remember, this has come out of a descending wedge from a long time ago, so I mean, it came out of this descending wedge way back in May and just been consolidating, ready to pounce higher, and it finally did. And now we're just, we're on the cusp of breaking out. And if you didn't read that, this is the article. Actually, it's on Trading Trader Summit. It's long US dollar Norwegian krona. I'll just go ahead and put that in our chat box so you guys can here. Let's see. I put it in chat for those of you guys listening in. You can read that, and it's just, my view on the US dollar Norwegian krona. And I'll tell you what, if that thing breaks the 200-day moving average, you got to be really, really careful with what's happening around you. The US dollar Canadian, this is another one that, Dale, you'd pointed out, could be a mover. And we have this flag formation, and we're actually outside of the flag right now. But the real reason why the dollar Canadian won't and can't go higher right now is that, look at stocks. I mean, we have the S&P at all-time highs right now. again. So here we are, all-time highs once again. These are highs in June. And you know what happens right as the market opens, Dale?
What, they'll goose it again?
Oh yeah, they're going to goose the market again. That's exactly what's going to happen, right?
Yeah, and is there, is the rationale besides what China did that Congress may be able to get cobbled together some type of infrastructure deal?
Yeah, I mean, you can throw all the
Who
reasons
knows?
you want out the world, all the reasons out there, but I mean, I look at equities, and if we break highs, I mean, we are going. You can just start looking at extensions. There goes the 127% extension once again at 4,300. This seems logical because it is also the 127% extension of this other move down. So you can see this confluence at 4,300 that I think is going to be a natural target if we break higher today. So, frankly, it looks like we are. And you'll even get the excuse, oh, look at crude's going down. That's good for the economy. Let's buy stocks. Right? Yeah. So, you can always make up a reason for the market to go up, and there's a lot of them.
Easy to be a reporter instead of a forecaster.
It is. Yeah, try finding try arguing reasons for the market to go down. It's like it's very, very
it's
boring.
Different this time.
It's always different.
Yeah.
It's always different, Dale. Every time. This time is different. This time is different. The one thing that I am paying pretty close attention to is that cryptocurrencies continue to hold up well. I mean, we probe the lows, and we probed these lows here in Bitcoin the other day, and then we've bounced, and then the Ethereum also probed these lows, and then we're holding up. I am going to talk to Bill Baruch from Blue Line Futures today. I'm excited about that because he has evidence on that conversation that we've been having about gold and
Bitcoin. About the inverse relationship.
Yeah, the inverse relationship. I'm not going to take away from what he's told me already, but yeah, he looks at open contracts and the differences between now and let's say a year from now. So he's going to be breaking down a lot of that data, and I think that's really important data for you guys to hear, regarding how investors are treating gold versus Bitcoin or vice versa. So and me, I look at Bitcoin as it's still pretty bearish here, even though we made a little false breakdown here. I still think it's creating lower lows. I think Steve and I talked about that yesterday. Well, we talked about it on the
edge,
on the morning edge. Thank you very much. I still think that Bitcoin's eventually going to break lower, but right now it's been paused, and I think as long as risk assets continue to stay elevated, I don't think there's really any reason for Bitcoin to go down unless there's some sort of regulation that hits the crypto space.
Why is cable taking it on the chin today, and EG is up sharply from?
It's the Bank of England, and I think a lot of people were expecting a hawkish Bank of England today, and they
didn't get it.
They didn't get the results that they wanted. Matter of fact, I think the voting members changed, and I was a little late to getting them.
Not yet. They haven't changed yet, but Andy Haldane, the chief economist, is going to be leaving in, I think, 2 or 3 months or something like that. And he's the one who's been hawkish, basically, who wants to reduce the bond purchases.
So they
forced him out still.
Yeah,
I don't know.
He just got
give us a breakdown on what the Bank of England, what happened with the BOV, because it happened just as I was getting in front of my computer.
Yep.
I was like, soggy getting in front of my computer today. So,
well, nothing actually happened. We had exactly the same as last meeting. So unanimous to leave rates unchanged, 8-1 to leave QE unchanged, with Andy Haldane voting to reduce the buying. So he's the lonely hawk, and he's going out basically soon. So I think just like myself, I was saying yesterday, look, I think the risk is with inflation rising everywhere. I think the risk is for the Bank of England to follow. Bank of Canada, Fed, and everything, just implying a little bit about tapering, tightening, whatever. And they didn't do any of that. And remember, they don't have a press conference either. So it is what it is. And the market basically was a bit disappointed. And I think that's why we got covering of pound. So pound selling right after the meeting.
Yeah, and Simon in our chat room, he pointed it out. He's like, how can anybody interpret anything the Bank of England does as hawkish without a press conference?
Yeah, exactly. Unless they explicitly announce something, it's very difficult. They cannot pass messages like like the Fed do, with certain words and certain ways they answer questions. So he's right about that.
Yeah, I think he's very, very succinct in that assessment. So, so the sterling's pulled back. We stopped originally at the 38% retracement. We hit the 50% retracement. Now, to me, it looks like we're going to actually test the 618 because there's a lot of horizontal support down here. So, if I was playing the sterling and trying to play the long side, I'd just be a little careful, because you're holding the 50% retracement right now, but all you need is a whiff of dollar strength across the board, and the sterling could be trading down at 138.70 pretty quickly. I think that, we're already coming out of an ascending wedge. We really failed at 140, which yesterday I had a short in this. I was so irritated because I sent out an update on Forex Analytics. You guys probably read it here. Yesterday, intraday update, the 140 level, we're up. It should be, strong resistance right here. And as soon as I sent out that update, I said, I'm going to put out I actually put an order to short sterling at 140.15 myself. And then I sold some, 140, and I just sold a small position, and I wasn't too aggressive when I sent that out. And, it's like, whenever you have a trade that works instantaneously, you never have the size that you really want.
Yeah.
Like it always works that way, doesn't it? Like,
and you always have too much on when you're wrong.
Yeah, whenever you're wrong, it's like, oh man, why did I take such an aggressive position? Exactly. Yeah. It's like, anyway, but
can I use the French term mind fuck? Excuse me.
Oh damn! Did you really say that? Steve, you're gonna have to beep that one out.
Bleep it out, yeah.
But sorry.
But the 140 level ended up being pretty big resistance. I actually thought we might overshoot to the the 140.15 just because it was a round number. But you see, we've actually been respecting the 618 retracement. So that was the 140 level, was the 618 retracement, which should have been aware of. And then obviously the 618 retracement on this pullback would be around 138, 69 or 68 or whatever. So just be careful. If you're trying to buy, the sterling on dips, like I said, if the dollar comes through with any type of strength whatsoever, then you're going to have a little bit of problems. So, that's the way I'm looking at that. But yeah, the euro sterling, on the other hand, man, that thing's been that thing ripped, and we've been monitoring this. It
held the 78.6 back on that, Blake. I was looking at it. I didn't do anything.
We've been saying, so you have to go back like a couple of weeks, and
this whole thing looks corrective from.
Well, so
I don't know.
We were just saying, if we break through the 618, we're going to make it to the 78% retracement. Well, I mean, weeks later, we came so close, and now, we're bouncing back in the channel. This is a channel, but what's more important about the euro sterling, and I think we should pay attention to this.
The higher low.
Well, it is a higher low, and we came out of a wedge. This is, obviously a couple of months ago, And granted, the rally was not as aggressive as I thought we would be coming out of this wedge. I thought we'd be trading closer to this 88 pence level, but that doesn't mean we won't. And you're right, we are creating a higher low. So Stelios, since you pay pretty close attention to what's happening with the sterling here, how do you feel about it at these levels?
I still think the euro pound needs to test 83 to 84, and that's where I'm going to change my tune. Remember, I said late last year, we had the European Union / UK agreement, a crappy agreement, whatever it was, it doesn't matter. Yeah. I said, look, I think the pound's going to be doing well in 2021. Well, it has been, and I really think the market needs to get to that level, and there, I think I'm going to be taking probably start accumulating a long position in
the Euro sterling.
Euro sterling, yes.
Got it. Okay, so basically short cable or short sterling at those levels.
Yes, and I really think that level I think is going to act like a magnet. Euro pound has tried a couple of times to bounce and it really can't. So I think we need to get there first, and then it's time for the next move.
All right. Well, Steve may be popping in here, and let's see if he's got any opinions.
I am here.
Hey, what's happening, Steve? What do you got going on? What are you seeing out there in the markets right now?
I think we need a little bit of a confirmation, but it looks to me like we might be starting the next leg higher for the dollar, which is something we've expected these days. So I guess we'll know by the end of the week. I mean, today, tomorrow.
Yeah, I mean, I'm sitting here with the euro, and I'm, this could be, coming out of a wedge, and we're just back testing. Maybe it's going to end up being more of a flag pattern that looks like this. But the sterling move today obviously gave the dollar a little bit of a goose, right? It pushed up the dollar a little bit, but we're gonna have to see the dollar really firm up against other currencies. Like you look at the Aussie and the Kiwi. I mean, they're holding up really well. I thought the Aussie would get to the 76 cent level.
Yeah, they're holding up pretty well, but this rebound higher looks corrective in nature to me in the short term.
Yeah. I mean, I agree with you. But let's see if what do you think could push the dollar higher from here?
I don't think it's necessary that we necessarily need to have some kind of a, let's call it fundamental catalyst. It might as well be, but I also think that some people that were short the dollar and, just didn't readjust their positions, might reconsider just, squaring up some of their positions here. So the catalyst might even be readjusting positioning or whatever.
And
what do you think, Blake? Yields?
I don't know. I would think
higher yields.
I would think bond yields are what would drive the dollar higher, but I mean that's going to drive the dollar yen.
I mean, we're never going to get risk off, so
yeah,
gotta be right.
that's a good point. And I mean, look, stocks are at all-time highs right now.
Well, I don't know.
What is the risk of?
Yeah, right. We don't understand what that is. But just technically looking at the dollar, Steve, and just to your point, we are building a flag pattern. We have, if I measure, the dollar index from just where the move started pre-FOMC, yeah, we're testing the 38% retracement. If you go down towards, the actual trend lows, we're nowhere near the 38% retracement, which means in essence, this pullback has been really shallow in the dollar index. So to your point, it seems very corrective, but again, I'm not sure what's going to drive the dollar higher unless we see risk off. But what is risk off?
You don't need to bother yourself with all that, because anyhow, fundamentals never mattered in the short term. They matter if you're a long-term investor, right?
Yeah.
If you want to trade shorter term, as we've seen from experience, technicals are the king.
Personally, I want to see yields rising. If they don't rise, then I think we keep going in risk assets, blah, blah, blah. Same old. I mean, I've been saying this for a while, right? And I hate it. I hate myself for saying it, but that's what I believe. So,
well,
hopefully.
if you look at yields, I mean, this is your 10-year, right? I mean, they do look corrective in nature as well. I mean, we're not. Yields have rallied back towards 150 on the 10-year, and we're holding these levels. So it's not like we're backing away, and there are a lot of people that assume that bond yields are heading back down again, but I don't know. I mean, they're holding up pretty well in the face of all this. So, all right, well, guys, we just have a few minutes. What else is on your radar? Is there anything else that you guys are seeing that might be, that might get your attention right now? I mean, I want to point out crude. I know Dale talked about it earlier, but this crude reversal yesterday at the 161% extension, this is the triangle that had formed since March. And, when I look at the triangle targets, there's my minimum target, there's my maximum target. We are within, the target parameters, if you will, of where crude could have gone, in my opinion, and we've met those parameters. So we also hit the 161% extension. I mean, if crude reverses, it's got to get our attention of some of these currencies that are more crude sensitive, like the Canadian dollar or Norway. What else are you guys seeing out there?
I agree with you. I've been covering crude for a long time, and I was looking for that target for quite a long time. And as I've been saying for a few days, I think the easy money on the way up have already been made in crude. And I would be very interested to get some part of the action, but after we see a very decent corrective move lower. Until that happens, I would be very conservative where we currently are.
All right. Well, I agree with you on that. So we've got crude oil challenging the 161% extension. I think we've got to keep an eye on that. Some of these yen pairs, they look, I know markets are extending themselves towards highs, but I have to point out my chart of the day yesterday, which is, I mean, this is really if you guys remember this one, and I want to talk a little bit about this, we were looking for a break of this this trend line here a couple of weeks ago. We broke it, we sold off, and now we're back testing that trend line. This is really a setup for a potential reversal. So I think right now, when you're looking at the Kiwi, and plus the Kiwi's at highs of the day, that's why it's got my attention, because we may be at highs of the day right now, but we might just need one little leg higher in this Kiwi yen that looks like this. Just one more reach in the New Zealand yen to this 78.70 level. Up here is the 618 retracement. This is what I blogged about yesterday. If we can get up here, this might be a really nice reversal trade. I think it's given us another look at this, nice little setup from a couple of weeks ago. So anything else you guys see?
Not really. As you said, the big mover today is the pound. So definitely has the spotlight at the moment. Having to do with the rest, I don't have anything to add.
Okay, great. Well, guys, just remember, if you're a Forex Analytics subscriber, even if you're at the light version, that means, the pricing's at, what is it, $20 a month, $19 a month. We will, you'll be at the, we'll see you at the Morning Edge webinar, where we'll go through the bias chart. We're going to go through all the majors. I'll see you guys there. Have a great interview, Dale, with Ben, and I'll let you guys take over. Have a great one.
Data's weak, by the way, in the US. durable goods,
Well,
and
Wait.
Yeah,
That
go ahead.
was the jobless claims.
jobless claims is rough, slightly better, but durable goods is worse. And um, actually, no, jobless claims was a bit worse as well. Anyway, it's slightly weaker across the board.
Yeah. Okay.
Yeah,
Well, the dollar-
recovery, and we're still more than double than where we used to be. We have almost 500,000.
Yeah, we'll get back there slowly.
All right. All right. Well, I'm going to let
right,
you guys
thank you,
take over.
guys.
Have a great one. And
See you tomorrow for TGIF, buddy.
yep. See you guys here.
All right, and of course you can all catch Blake on the Morning Edge with the rest of the team. It's very interactive in there. You could ask questions, and it's an important part of our program to keep you guys informed. So it looks like Ben is here. Welcome back, brother. How are you, Ben? Hello, Ben Maldonado.
Now can you hear me, Dale?
Yeah, I thought you were playing Sounds of Silence by Simon and Garfunkel. So anyway, great to have you back, buddy. I know you always come here prepared, and I'm just going to let you go. Just one question: are you surprised at the resilience of stock indexes continuing to, even if they're marginally making new highs, they are making new highs?
Absolutely. And I have to hand it to you. That was a good call you made the last time we spoke several months ago. You saw another high. I did not see another high coming, based on the cycles and the geometry and where we were. And we're poking through and making new highs. The question is, are we going to stretch out and actually make gains and, make some air over those previous highs? Or is it setting up for some kind of divergence and a false break?
Yeah,
and
that's what I'm thinking.
Yeah, and
Yeah,
I think the weight of the evidence is there, and we'll go over some stuff
okay.
in the presentation today that shows why it feels like, and you'll get this reference, the old cartoons. Remember Wile E. Coyote when he was chasing the Roadrunner?
Ledge? Yeah.
When he goes over the ledge and his feet are still moving, he's still in the air and he's suspended and nothing's happening. And it feels like that's where we are in the markets right now.
Poor Wiley.
where we're making new highs and people are shouting about the breakouts and all that, and ultimately
they keep doing it by rotating. For months NASDAQ did nothing, which to me was a sign that what happened to leadership, and then they went to value, and in the last 3 weeks or so they've moved back to the growth tech behemoths, and that's how they keep the deal going. Plus, stronger oil has I think helped the market as well, one of the best performing sectors. But anyway, enough of me. Let's get going with your Epoch Cycle.
Yeah, we're gonna run through our presentation and make a case for some intermarket relationships that seem to be pretty telling and may give us a little edge going forward here. In the beginning of the year, when I was on with you, Dale, we talked about 4 themes, and in one way or another, those themes have played out pretty well. The inflation, stagflation theme continues to resonate, where we're seeing prices move higher, things are sluggish. They're giving you all kinds of reasons why it's not going to be sluggish for long, but we still keep seeing the sluggishness, whether it's supply chain issues or
employment numbers,
not being able to get people to start working again, businesses can't hire. I mean, it's there. The Epoch Cycle, the main theme of the Epoch Cycle is erosion of trust in old large institutions. That has been happening. We've seen the supply chain disruptions. Food security is now starting to come to the fore, and I think that's only going to intensify. What I wanted to do was also give people an idea of sort of the second half themes to look for this year, because I think They're important with the cycles that we've entered into in the last month or two. These sorts of themes are going to be playing out, and we're going to see them in different ways. You've spoken a little bit about this on your morning show. This inflation will be a theme in the second half, and it's going to be, I feel, very prominently represented with wage inflation, where people are going to, in their businesses are going to have to pay more. Society is going to start asking for people to pay more. It's sort of this whole theme with a more equitable distribution of profits, right? Are people being paid enough? And this wage inflation, as you've said, it's not a transitory thing, because you're not gonna pay someone $20 an hour and then a few months later say, sorry, you're going back to 10 or you're going back to 15. It's not going to happen.
Right.
And the inflation situation is a similar setup to the 70s, where it was wage price inflation was a big driver of the inflation during that time frame. The other type of inflation that I don't know a lot of people are aware of or are looking for, but I'm seeing it, is what I call stealth inflation.
Oh yeah, the packaging.
Packaging. It was the other day I was looking at, we buy the same type of toilet paper because the family likes a certain type. So I got it and I looked at it. It was same price. And I said, oh, that's interesting. They haven't raised prices yet. Then I looked at, we had an old roll and I looked at a new roll, and the new roll was much smaller, not number of sheets in it, because that would be easy. It was less wide.
Oh.
And so they're putting less material in for the same price, giving you the perception that, prices aren't going up, but you're paying more. You're paying the same amount for less, which is paying more.
Yeah.
So I think we're going to see more and more of this stealth inflation as the government tries to keep it, the perception down, and producers and people that are selling goods are trying to, prevent any backlash from rising prices. The next item is a big one that I think we got to watch, and I have an example of it already. The cycle that we've entered is subject to, it creates a background frequency where we are subject to sudden changes in the collective's perceptions. Now, what does that mean? Is that people's opinions of things are subject to rapid and quick changes. A perfect example of it is the whole lab leak theory. 6 months ago, if you brought it up, you were a nut job, you were a racist, you were all these sorts of things. Now it's accepted. It's accepted that it's a real possibility. We need to investigate it. We need to look into it. In terms of the markets, people's perceptions of where things are going or what things mean are going to be subject to rapid changes. So we have to be flexible. We got to really watch our levels, our technical levels. That's why, again, if the market keeps going higher, you can't stubbornly sit there and say, oh, well, it's going to go down. It's the Wile E. Coyote thing. Yeah, that's all funny, but you got to really watch your levels. If we keep holding levels, then you got to go with it. You can't fight it. But watch for this sudden change. Watch for the volatility associated with that. And the other thing I think is the dollar. You guys have been talking about it. The dollar is the key, and I think it's going to be a wrecking ball, both up and down. And we're going to go over some reasons why. So those are the themes I think for the next 6 months we got to be aware of, because they should be fairly pervasive.
Is your cycle work and technical work leaning towards the low and the dollar is in after the Fed last week?
A low is in. I don't think the low.
low.
Yep. Okay. I think A low is in, and we'll go over that. I'll actually show you the path that we're looking for there. For those that haven't heard the talk before, I'll quickly review what the Epoch Cycle is. It's a 400-year cycle where we're coming to the very end of it. We're in the last 5-6 years of it. This cycle was the characteristics of it are development of large centralized institutions that society depends on to provide services, organization, support, structure. We're in the fragmentation phase. We are in a time of massive changes because the old system and these old institutions are going away and they're being replaced by new ones. Couple examples, people, this is the rise of Bitcoin. The cycle supports Bitcoin, right? Get away with central control of money, decentralize it. The Wall Street bets is another example. It's a decentralized hedge fund, right? It's a bunch of individuals who are acting collectively, creating like a hedge fund. And it's, again, it's another example of this sort of thing coming. And I think, I know a lot of times, Dale, you talk about this great reset, and what is that great reset?
Yeah, I don't really even know what it is. I think people talk about it being like the end of the dollar being the reserve currency as part of it, right?
Right. I don't know whether the dollar is going to do that. And based on what the cycle work and the technical analysis I've done on the dollar, it's not happening right now. I'll tell you that.
Yeah.
But this epoch cycle is the real great reset. That's what the great reset is. It's not, 4 or 5 guys sitting in a room in Geneva, figuring out what the world's going to be like. It's this massive change in what the background weather or the background frequency is going to support, and how we're going to transition, from this centralized world to a decentralized world.
Okay.
Here's some examples of what happens in the epoch cycle, where these failing, large, powerful, centralized institutions, we've gone over a bunch of these. I added a few recently for this presentation. Big tech is one. Years ago, big tech was supposedly the greatest thing. People loved it. Couldn't get enough of Google and Facebook and Apple and all these companies that have these monopolies. So to, without calling them monopolies, they're monopolies. The tide's turning on that.
Yeah, you mean with the regulatory proposals in Congress?
Not only from a regulatory standpoint, but a sentiment standpoint.
You mean people aren't using Facebook as much, not as much engagement? Or
well, they're using it, but they're not happy with it, right? They want an alternative. They feel like, they have too much power. There's too much control. Yeah. There's too much manipulation going on. So yeah. I think big tech is in the crosshairs now. With the recent revelations from the emails, you'd have to say science and scientists now are being questioned, right? Are they really using science, or is it agenda driven? And it doesn't matter where you fall on that debate. The fact that the debate is becoming something is a sign of this cycle, right?
That's why you didn't get vaccinated, correct, Ben?
It's part of it is that, as well as, which I'll show you with the connection with the 70s, is we're in that same cycle. And in the 70s, there were major issues with a program.
Swine flu.
That's right. They were trying to vaccinate the whole country, and they had major issues.
Yeah.
So let's go to a little smaller cycle. We go from 400 years back to about 50 years. We look at the 70s. We've talked about this on previous presentations, but I wanted to just show this slide. We had Nixon, who was connected with Trump, and there's all the reasons why they're connected, which we've reviewed. I put this slide in. Is Joe Biden basically Jimmy Carter? Do we have Jimmy Biden? And let's look at some of the connections here.
What swingers they look like in there.
They look very happy, didn't they?
Let's see that again.
You want that one again?
Come on, one more time.
They look pretty happy.
Yeah. Jimmy's going, hey, I like younger chicks. All right, go ahead. I'm sorry. I'm being very controversial today. Go ahead.
Right. So the connections between Jimmy Carter and Joe Biden, I think, are fantastic, right? They're both both Democrats coming after an unpopular Republican president. Both of them dealing with stagflation issues. Both of them have vaccine issues. Women's and gay rights were prominent during the Carter administration. They certainly are to the forefront now with Biden. We saw gas lines in the 70s. We've got gas lines now on the East Coast. We had that a month or so ago when that Colonial Pipeline got hacked. There was a war in the Middle East. You have the Israeli-Palestinian conflict going on now. A few more that I put here that have not happened yet, and I don't think I could give us a check mark yet, but could be coming. If you remember, New York City was on the verge of bankruptcy in the mid 70s. It may happen again. If it wasn't for the federal bailout, it probably would have happened this year, but it may happen again. The first Earth Day occurred in the 70s. The Green New Deal is, being pushed in Congress by a large number of members of Congress, and it may be a reality. It may come to fruition. This last one is one I find really, really fascinating, is that Jimmy Carter boycotted the Moscow Olympics, the Summer Games in 1980. He did it because of Russia invading Afghanistan. I've heard talk now that this is not set in stone, and he probably won't do it, but just the fact that they're talking about potentially having the US boycott the Beijing Olympics next year, the Winter Olympics next year in Beijing, and having us boycott that, it's fascinating to me that these two guys 50 years apart are pursuing potentially similar paths.
Okay, that's an interesting one.
Yeah.
Where did Russia invade? Was that Afghanistan?
Afghanistan.
That's
yep.
right.
That was Afghanistan.
1979. Yeah.
That's right.
Okay. All right.
This presentation is going to be a lot about the dollar, because everything that we've seen since the COVID crisis, I think has keyed off of the dollar. And I'll show you some of the relationships when we get into the slides. So right now it's king dollar, right? The dollar is king. It is the global reserve currency. And I believe in the markets, it's all about the dollar right now. The consensus since the COVID crisis hit is that because of the actions of the Fed and our government spending all this money, that the dollar is doomed. It's going to no longer be the reserve currency. It's going down, and going down hard. And everybody was positioned that way, and continues to mostly be positioned short the dollar. The question I was asking myself as I was looking into this and researching it is, what if the dollar says, no, that's not happening. We're not going to do that. We're not going to crash. We're not going to collapse. We're not going to give up reserve status right away. And that's what this presentation is going to be about, and showing that. First, let's go into the relationships. Since last year, since January 1 of 20, there's the two charts, the DXY and the SPX. And you can see the correlation. As the dollar went up here, the S&P crashed. When the dollar started going down, the S&P started going up. And the rate of descent has slowed, and we'll talk about this, but the relationship is still there. When the dollar is strong, the market's weak. When the dollar's weak, the market's strong. How long this correlation will hold, nobody knows, but right now it's pretty evident. Same thing with NASDAQ. There you see the NDX and the DXY.
Yep.
And here's the Goldman Sachs commodity index and the dollar, right?
Yep.
Same type of relationship. Strong dollar, weak commodities, weak dollar, strong commodities. Well, if everybody thought that the dollar was going to be weak because of the QE, because of money printing, because of the spending by our governments, where can we go? What can we look at to see, is there a precedent for this? Do we have any benchmarks to look at? Well, in Japan, they've been doing QE for 20 years. So I went back and I looked at the Japanese yen futures on a monthly basis. The Japanese started QE in 2001. It's been 20 years. And the yen, while being volatile, has essentially gone nowhere. It hasn't crashed. It hasn't cratered. Now, the purists are going to say, well, you can't compare the Japanese economy to the US economy because we're very different. I'll give them that. I'm only looking at, did it dramatically affect their currency? And the answer is no. So maybe Does it mean that it's not going to dramatically affect the US dollar? No. But maybe it means that it's not automatically going to crash the US dollar. So there may be an opportunity here if the market thinks, hey, the dollar's going to crash and the dollar's going down, and maybe it isn't for that reason. Here's the DXY on a monthly basis. What I really homed in on was, if you look at the last time the dollar had a big move down was in the after the dot-com crash, right?
Yeah.
Then we did QE at the Great Recession, right? After 2008, 2009. Here's that decline right in here. But look at the dollar since then. And I would hardly say we've had tight monetary policy or had a government that was spending within its means. They've been spending like drunken sailors for 10 years. And look at the dollar, higher lows, low, higher low, higher low, another higher low. The speculative path I have for the dollar right now is we're going to see a rally, a strong rally, which you guys have been saying, it looks like this little corrective move has stopped, and the next rally is going to start. I think we can get up. Go ahead.
95, 96.
Yep. 95.70 resistance area. I think we can rally into that. Then I think, I don't know what's going to happen. I don't know what the event is going to be, but the path and the cycles for the dollar are showing another strong move down in the dollar after this next high. And so I imagine that there's some sort of exogenous event where we're going to have more QE, more government spending, and the dollar is going to take a big hit down to this support level in the 85.50 to 87.50 area. And then again, I don't know what the event's going to be. I don't know what's going to happen, but the cycles are calling for a massive dollar rally. And the different levels, these three arrows represent different possible levels for a potential price on the move: 104, 112, or 120. Now, I know people know that I've been very bullish on commodities. And if I'm sitting there listening to me talk and someone says, well, we're going to see a massive rally in the dollar, how in the hell can you be bullish on commodities? Aren't commodities going to get killed if the dollar's strong? Well, and that's what's been troubling me about this, right? And I've stepped back and I looked at it and I said, well, let's look at history. Let's look at the similar cycles that we're experiencing now. What happened then? Do we have an example where it could make sense that commodities and the dollar could go up? So I went back and looked at the 70s. Here's the DXY from 1978 to 1980, essentially. Big move up in the dollar. Right?
That was Volcker. That was Fed tightening.
Well,
and you're right. And commodities were going up. Grains were very strong into that. I remember corn, and the Fed, didn't like what was happening to grain prices. Actually, higher rates did break the corn, but corn was really the kind of star of the show back then.
Well, here we're going to go over a bunch of different charts from that time period and see them. Here's what happened to 30-year yields.
Yes.
So yields went up dramatically. Yeah. Gold, with a strong dollar, gold went to all-time highs at the time.
Yeah.
Strong gold. Silver, same thing. Crude oil, same thing.
Yeah. So it takes a while, even though you have dollar strength, for it to have impact.
Right. Copper, same thing.
And look at those prices compared to today.
Yeah. Look at wheat. There's what you were talking about, the grains. I mean, I could have showed a ton of charts. I tried to show some in each sector so you see what happened and get a flavor for what these commodities did. Look at sugar.
Yeah, I remember.
So, I mean, the dollar, there is precedent for the dollar and commodities both rising sharply along with interest rates. And I think that's what's coming. I think that's what's coming. inflation and stagflation is here. Both of them are here. How do you protect yourself? How do you do well? You buy real assets. I've talked about this. So let's look at a few. I don't have a million charts to go over. I'm only going to show you a few this time.
It's okay. We only have 5 minutes left anyway.
Exactly. So here's the SPX. I say one more time because I believe this is the one of the last few times where we're going to get some sort of Fed intervention and the markets are going to respond positively. So this move here into July, August, I think is this next move up in the dollar. So the dollar is going to go up. We're going to get a correction here. It could start today. It could start tomorrow. It could start next week. It could start next month. I believe it's starting any minute now. We're going to get this move down. And then whatever that event is that creates this next Fed intervention, this is the terminal blow off high. I mean, I think we see 4,850, 4,900, 5,000 on the S&P by next January, February. First move down is to 3,750, 3,800 by my work using geometry. And then we blast off one more time into the terminal highs next year.
Okay.
Couple charts I wanted to highlight that I think are look
that's
especially attractive.
starting to percolate. here.
Yeah. So here's natural gas, right? This and Dale, you recognize this formation because in our previous talks, I've shown how there's a tremendous base in all these commodities. Once they break out, then we get the big move. Gas is just now breaking out. We've got a 12-year base, and we're just breaking out of this major downtrend line from the 2011, 2010 highs. I think gas has a big run in it.
14
Targets
maybe, huh? 14,
14's possible. I think
yeah.
in the short run, I think you once it gets going, $7 and then $10.
Okay.
So gas.
Ronit's saying 1720.
That would be a hell of a move. I think it's possible. I mean, listen, if we're in a super cycle on these commodities, they should all take out these old highs, right? They should take out those highs. And 1720 would be right up here at my resistance level, on the top of the square. So it's possible. I just like the risk reward. I like the setup on natural gas. Here's another one that's already broken out, sugar.
Yeah.
But it's got, it hasn't made the move like the grains and other things have, which are correcting. I'm still bullish long-term, but they're correcting. But here's sugar. Sugar's another one that, is basing in this 16, 17 range for the next move higher. And so those are the two I wanted to highlight. And the summation is it's all about the dollar. And if we see dollar strength, you're going to see weakness in the market. And when you see that dollar go up in this next big move up, don't be afraid, because I think the commodity history shows and the cycles support that the commodities can go right with it.
One thing you don't cover, and just a quick comment on crypto.
Mm-hmm.
What do you think?
I'll show you a chart. There's Bitcoin.
Okay.
So Bitcoin, we talked about this. You and I talked about this when it was at 60,000. I said, we're really vulnerable here if we cannot get above this resistance. Right now, crypto is in this bearish consolidation, in my opinion. And it's basically been screwing with everybody on both sides of this triangle. Broke out here. Everyone got excited because we were below this resistance. I said, forget it. I'm not interested until we get above that and settle above it. Now we broke down on the bottom of the triangle, screwed with everybody there that started getting bearish, and now we're back in it. I think the weight of the evidence is lower. I think the prices I'm looking for here, this is around 23. And if 23 doesn't hold, the next stop is 15.
Okay. Scott Henderson is asking, and we'll wrap it with this question. So what would be your tell for that US dollar breakout?
For the US dollar?
Yeah. What would be your tell? Is there a level or something that would tell you it's happening?
95.70. is the level.
Is a
That's-
breakout.
That's the massive breakout. We get above, and settle above that.
Okay,
It's-
then we're going to 100.
Then it's
10.
104, 112,
Yeah.
120.
Okay, yeah, but right now you're thinking it's just going to be a bear market rally to 95.70.
That's right. I think we
Okay.
rally into that area and then we go down and make lower lows. I mean, you know how the boys that control the market love to do false breaks. I think that's what they're going to do. They're going to take it down, clean out all the stops, get everybody bearish on the dollar, and then they're going to launch the massive move in it.
And what do you think they'll take it beneath 88 when they do that? Recent low 89.20.
I mean,
some people are looking for 85.
Yeah, I got support in like the 85.50 to 86 area. So
right.
do they go down and clip that? Maybe.
Yeah. Okay.
You know? Yeah.
Great interview, buddy.
Appreciate it, Dale.
Yeah, it's good to reinforce what's going on, and your epic cycle is epic, EPIC. So thanks, buddy. Good hunting, and I'll catch you down the road. We'll set up another one. Okay, bro.
All the best to you, Dale.
Okay, so that's a wrap. Everyone thank Ben for sharing it. Sinatra's thanking you, Monica. Ronit likes it because your views are similar on things like natural gas and the dollar, and how people like agreement. So you're a genius if you agree with people, right? Huh? Is that it, Ronit? He's a genius. He must be, because he's seen what you are. Okay. All right, everyone. You have a great day trading. See you. Remember, don't just count your epic cycles, count your blessings, and be grateful during this cycle for any little thing you could find. And that's going to be a wrap. You're welcome, Scott, and we'll see everyone to wrap the week. Thanks again, Ben, very much for sharing your views.
Take care, Dale.
All right, buddy.
See ya.
And guys, you could join the team for the morning edge in 13 minutes. So get over there. Adios.